now we have to discuss here about steps of accounting. So while or before discussing these steps of accounting, I will be continuing with the same example of that shopkeeper uncle owner, right? So grocery owner, they used to maintain that red color register, right? And that red color register, they used to record day-to-day business transaction. The work done by that shopkeeper owner, or you can say uncle, is nothing but work of the bookkeeping. Then after maintaining that record, one fine day, that uncle hand over that red color register with you, right? As an expert accountant, you have to analyze that book and you have to give a performance analysis of that uncle's business, right? That is the expectation of that uncle. So now what you are going to do, so you will be going to apply your accounting concepts here, right? As so far you understand, so there are accounts which are divided into two broader categories. One is your modern approach and traditional approach, right? So that concept will help you in here while analyzing the transactions recorded by that shopkeeper uncle. So whatever transactions recorded by that shopkeeper uncle, from that transactions, you are going to find out what? You are going to find out the financial transaction. So what is financial transaction? So financial transactions are those transactions where money is involved, right? So you'll be going to find out monetary transactions or a financial transactions, right? So when you are identifying the transactions, you will be going to identify what? You will be going to identify what are the different accounts involved, right? As per the modern approach or as per the traditional approach. Whatever approach you will be using, it's an useful and will be giving you a result, right? So you will be going to apply, for example, you will be going to apply modern approach of accounting for identification of accounts. So as per the modern approach, you will be going to find out, so each and every transaction, what are the different assets, liabilities, income, expenses, capital is involved, right? You will be going to apply that. So after segregating different accounts which is related to asset, liability, capital, income, expenses, right? What is the next step that you will be going to do? So next step, you will be going to apply the golden rules of accounting, right? So you will be going to apply golden rules of accounting, or you will be going to apply rules of debit and credit, right? Both you have studied now. So golden rules of accounting, like personal account, real account, nominal account rules are there. So as per the personal account, debit the receiver, credit the giver. As per the real account, debit what comes in and credit what goes out. As per the nominal account, debit all expenses and losses, credit all incomes and expenses, right? So these golden rules of accounting you can use, or you can use now rules of debit and credit as well, right? So by using these, what you will be going to do? So by using these, you will be going to pass journal entry, right? With the help of, by applying this concept, you can easily find out now from each and every transaction, so which account to debit and which account to credit. So for example, if I consider a small simple example, so purchase of goods worth rupees 20,000 on a cash basis, right? This is the transaction. This transaction recorded by that shopkeeper uncle in his red color register, right? So you are now analyzing those transactions, right? You are applying your accounting concepts and accounting rules and regulations, right? So by reading this line, what is the first step that you are going to do? So you will be going to identify the two accounts involved, right? So here two accounts involved, and that is nothing but one is your purchase account and another is your cash account. Yes or no? Right? So here two accounts involved that you have identified, so purchase account and cash account. Now, sir, which account to debit and which account to credit? That is also an important part, right? So for these, you can apply either golden rules of accounting, or you can go with your modern approach of accounting by following the rules of debit and credit as well, right? So I'm following here the modern approach, right? That is nothing but rules of debit and credit only. So purchase is my expenses or what? But obviously purchase is my expenses, and so expenses we have to debit or we have to credit. So whenever expenses get increased, we have to debit it. So this purchase we have to debit. Simple. So cash is asset, liability, expenses, income, or capital. So we know cash is my asset. So cash is my asset. So if cash is asset, so asset shows which balance? So cash asset shows debit balance. And whenever cash get increase, we have to debit it, and whenever cash get decrease, we have to credit it. Yes or no? So here in this transaction, when you paid 20,000 rupees, your cash will get decreased. So that cash we have to credit, right? So whatever you studied so far, you are applying here now. So after applying these, you have identified which account to debit and which account to credit, right? So here your answer is we have to debit purchase account and we have to credit cash account. Getting? So by identifying these, so the next step will be of passing journal entries, right? You will be passing journal entries, sir. Purchase account debit to cash account, right? So after passing journal entry, so next come is your preparation of ledger accounts. You will be maintaining two separate accounts. One is your purchase account and another is your cash account, right? So there are n number of transactions in a day-to-day business, right? So for recording, for maintaining that, sir, journal entry is not appropriate way. So you have to maintain that by preparing separate accounts through the ledger accounts. So you'll be preparing ledger account of purchase, you will be preparing ledger account of cash. Sir, at the end of the every month or at the end of the accounting period, what you will be going to do? Right, you will be going to close down these ledger accounts and you will be finding the closing balance. How much is the total amount of purchase done by us during the year? So what is the amount of cash that we are having at the end of the year or at the end of the month? So that will be going to find out. Sir, at the end of the year, whatever balances are there regarding your purchase, regarding your cash, or regarding any ledger accounts, regarding sales, capital, so you'll be going to collect that, right? And after collecting that, you will be going to represent in a tabular form in a systematic way, and that is nothing but preparation of trial balance. So that is known as preparation of trial balance. So in a trial balance, every ledger account's closing balances will be there as a debit or credit balance, depend upon the nature of the account, right? So after preparation of trial balance, your next step is preparation of financial statements, right? Preparation of financial statements. So what is preparation of financial statement basically, and why we are preparing financial statements, why we are preparing this report? So ultimate aim, ultimate goal of accounting process is to find out the financial performance or as well as financial position of the business, right? So your goal will get attained by preparing these financial statements. So financial statements are consist of your trading account, profit and loss account, and your balance sheet, right? So the preparation of this trading account, profit and loss account, and balance sheet will provide you financial results, right? So when you prepare trading and profit and loss account, you understand how much profit you have earned from your business or whether any loss in the business or not. So with the help of that, you can understand the financial performance of your business. And then when you prepare a balance sheet, which is comprises of two sides, right? So balance sheet, it's a statement, it's not an account. It's having a liability and assets. So by understanding that, by recording that balance sheet, you'll be getting a clear picture of your asset as well as your liability, right? And so for preparation of that ultimate financial statements, so there is a roadmap, there is a breach that we have to cover, right? You cannot directly jump into the preparation of the financial statement. So first of all, we have to understand the golden rules of accounting, right? Then identification of accounts. Then after that, so recording of transactions are done by the bookkeeping, done by the shopkeeper uncle. So that analysis part is in the accountancy that we have to do. So we identified that account, we identified which are the two accounts involved, then we apply the rules of debit and credit, we find out debit credit of accounts, and then we move to the passing journal entry. So after passing journal entry, you prepare a ledger account. So after preparation of ledger account, you move to the preparation of the trial balance, and with the help of trial balance, you can easily find out or you can easily prepare your financial statements. So it's a link between everything up to the financial statements of any business or any company, right? So these are the steps that are involved in preparation of or in the process of accounting, right? Now we have to discuss a question on your journal entry, right? See, business commenced with capital of rupees 6 lakhs. So owner of the business started a business by investing a capital of rupees what? A capital of rupees 6 lakhs, right? A capital of rupees 6 lakhs comes into the business. So we know whenever capital comes into the business, so capital get increased means capital we have to credit. So here two accounts involved that we know. One is your capital. So capital we have to credit. And so capital of rupees 6 lakhs comes into the business in terms of cash only. So cash is asset. So when cash increases, asset increases, we have to debit, right? So what will be the entry here that we have to pass? So entry will be a cash account debit, cash account we have to debit, and we have to credit capital account, right? Rupees 6 lakhs comes into the business. So here we have to write down narration as well. So narration is nothing but the explanation of the above entry, right? So explanation is being, and always we have to start narration with the word being. Being capital introduce, right? Being capital introduce. Next. So what is the next transaction that we have to see? So next transaction is rupees 4,50,000 deposited into bank account. So 4,50,000 rupees you have deposited into your bank account. So a 4,50,000 rupees of cash, right, will get decreased. So one asset will get decreased, and so bank is another asset. So bank balance will get increased, right? So here simple. So bank account we have to debit because it get increased, and your cash balance get decreased. So we have to credit the same, right? So with the help of or because of this transaction, so which journal entry we have to pass? So journal entry here will be bank account we have to debit, and so we have to credit cash. So whenever one amount get increase in cash balance and one amount get decrease or increase in a bank balance, it is known as contra entry. It is known as contra entry. So 4,50,000 rupees comes into the bank, and same 4,50,000 rupees goes down from a cash balance. So narration being here, being cash deposited into bank, being cash deposited into bank, right? Then next transaction that we will see. So next transaction, rupees 2,30,000 rupees of plant and machinery purchased by paying 30,000 in cash immediately. So business purchase 2,30,000 rupees of machinery. So 2,30,000 rupees of machinery comes into the business. So machinery is asset. Asset get increased. We have to debit, right? And so you paid 30,000 rupees immediately. So 30,000 rupees of cash goes out of the business. So 30,000 rupees go down. So that we have to credit, right? So balance 2 lakh rupees still there. So balance 2 lakh rupees we have to pay. And the person to we have to pay these 2 lakh rupees, the name of the person is not given. In that case, we have to consider it as creditor. And so creditor is your liability, right? So your liability will get an increase. So liability, what we have to do? So liability, whenever liability get increased, we have to credit the same. So what will be the journal entry here? You have purchased 2,30,000 rupees of asset here, right? So 2,30,000 rupees of asset comes into the business. So you will be going to debit purchase account here, machinery account here, right? Asset account. Machinery account you will be going to debit for 2,30,000 rupees, right? You paid amount by cash. How much? 30,000 rupees. And balance amount is how much? So balance amount payable is 2 lakh rupees, and that is nothing but creditor, right? Being machinery purchase, I can write down being machine purchase and part payment is done, right? Machine purchase and part payment is done, right? The next transaction, So next transaction is purchase goods worth rupees 40,000 for cash and 45,000 on account. So what does it mean? So we purchase goods of rupees 40,000 for cash. For cash means you have paid 40,000 rupees directly. That is 40,000 for cash. And 45,000 on account means, so 45,000 account means you purchase this on a credit basis. You have not yet paid cash, right? So here purchase of goods on a cash basis as well as on a credit basis is involved. So accordingly we have to pass general entry. So purchase expenses. So purchase always we have to debit, right? So purchase is expenses and that we always have to debit the same. So here entry will be purchase account debit. So 40,000 rupees of goods you purchase on a cash basis and 45,000 on credit basis. So total amount of purchase is 85,000, right? So you paid cash. So cash account we have to credit. So cash is asset. When asset comes down, we have to credit the same, right? So cash account we have to credit how much? So 40,000 rupees goes out of the business, right? And so 45,000 is still payable, right? And it means liability get increase. So whenever liability get increase, we have to credit it. So we have to credit creditors account here. Creditors account 45,000 rupees. Being goods purchase on cash and credit basis. Right? Then, so next transaction we have to see. So next is paid a check of rupees 2 lakhs to the supplier for plant and machinery. The supplier you have from whom you purchase a machinery, to that supplier you have paid 2 lakh rupees, right? So here your liability will go down, your creditors will go down, right? So when your creditors will go down, at that time you have to debit the creditor or you have to debit the liability, right? And so 2 lakh rupees goes out of the business. So 2 lakh rupees is a cash for you, asset for you, right? And whenever asset goes down, you have to credit the same. So here what will be the entry? So payment of plant and machinery. 2 lakh rupees is a payment for plant and machinery. So the entry will be creditor account debit. Creditor account debit to cash or bank account. You have paid 2 lakh rupees. Right? Being payment made for plant and machinery. Simple. Then, so we have to see the next transaction now. So next transaction is withdrawn by the proprietor rupees 35,000 cash for personal use. So owner withdraws 35,000 rupees from a business for personal purpose, right? So that is known as drawings, right? So 35,000 rupees of cash goes out of the business. So asset come down. So whenever asset comes down, so we have to credit the same. And so drawings. So drawing is one kind of, I can say, liability for the business, or you can say capital will go down because of the drawings. So capital is liability, right? And liability, when liability goes down, so we have to debit the same, right? So what will be the entry here? So 35,000 rupees withdrawn from a business. So entry will be drawings account debit to cash account. So entry will be drawings account debit to cash account. So 35,000 rupees of amount withdrawn for personal purpose, being amount withdrawn for a personal purpose, right? Then, so what is next transaction? So next transaction is insurance paid by check rupees 2,500. So you have paid amount of insurance by check. So here expenses are recorded, 2,500 rupees of expenses recorded, right? And 2,500 goes out of the business as well. So expenses is having a debit balance. Whenever expenses increases, we have to debit the same. So here I will be going to debit what? I will be going to debit insurance account or insurance premium account, and cash goes out of the business. So we have to credit cash. So what will be the entry? So entry for this transaction will be insurance account debit to cash account. So entry will be insurance account debit to cash account. Being insurance premium paid, amount 2,500 and 2,500 rupees, right? Then, so next, a salary of rupees 5,500 is still outstanding. So we have to pay 5,500 rupees of salary to the employees, to the workers. So which kind of entry we are going to pass? So salary is my expenses, right? So this 5,500 rupees are payable, and this is related to this accounting year only, right? So this 5,500 rupees which is payable, which is related to this accounting period, and it's an expenses, so that we have to record. And so this payable is nothing but your liability, so your liability will get increased, right? So whenever liability get increased, we have to credit the same. So what will be the entry for this? So entry for this will be simple. So entry will be, you have to debit salary account, right? Salary account debit to outstanding salary account. So amount being 5,500 rupees. So why we debited salary account? So it's a expense related to this accounting period only, right? And whenever, see, whether you paid amount or payable, it's always an expenses. Your expenses get increased, right? You have recorded on a cash basis or on a basis of recording of transaction. See, you can record the transaction on a cash basis as well as on happening of events. So this salary is related to current year. So if the salary is related to current year and 5,500 rupees still payable, so we have to record that, right? So salary account, we have to debit 5,500 rupees, and this is a payable. So your liability will get increased. So if liability get increased, so we have to credit outstanding salary for rupees 5,500, right? Then, so furniture of rupees 30,000 purchased in a cash. So furniture of rupees 30,000 purchased in a cash. So what will be the entry? So whenever you purchase any asset, so that asset account we have to consider, right? And when you purchase any goods, any material, so we have to consider purchase account, right? So here you purchase what? You purchase furniture. So you'll be going to debit furniture account here. Furniture account we have to debit, and you have paid a cash. So cash account we have to credit for the amount of rupees 30,000 and 30,000, right? So this is the question based on your journal entry, right? So far in this entire chapter, what we covered? So far in this entire chapter, we covered, so what is bookkeeping, what is accountancy, right? So bookkeeping and accountancy are interrelated. So without bookkeeping, we cannot do the accountancy work, right? We studied this with the help of one example of that shopkeeper uncle, right? That red color registered. So red color register maintained by that shopkeeper uncle was the part of bookkeeping, right? And accountancy start after bookkeeping. So accountancy start with analyzing the accounting transaction. That should be a financial transaction. Then identification of the accounts, right? You have to identify two accounts involved. Then you have to apply your rules of debit and credit. You have to find out which account to debit and which account to credit, right? Then, so after applying the rules of debit and credit, by applying your modern approach or your traditional approach, both the approach will be fine enough, right? What are the assets, what are the liabilities, income, expenses, capital, right? And when you are applying rules of debit and credit, you are applying when to increase. If any asset get increased, what to do? Debit or credit? And if any liability increases or decreases, what we have to do? Debit or credit? That concept of rule of debit and credit you have to apply, right? By applying that, you can be able to identify, so you can able to form an accounting equation as well. So the formation of accounting equation helps you in preparation of your balance sheet. That is part of your financial statement, right? And once you know the debit and credit thing, so you can start with preparation or passing of the journal entry. So after journal entry, next part comes is a preparation of the ledger accounts, right? So preparation of ledger account is based off your journal entry. If you are not going to identify accounts, you are not going to identify debit and credit, if you are not going to pass the journal entry, so you will not be going to prepare, you will be not going to pass journal entries, right? Because it's an interrelated. So after passing a journal entry only, you can be able to prepare a ledger accounts, right? And once you're done with the ledger accounts, the next step comes is the preparation of the trial balance. And with the help of a trial balance, as a trial balance, a base document you can say, or base statement you can say, and based on that, you can easily prepare your financial statement, right? Your financial statement comprises of trading account, profit and loss account, and balance sheet. So when you prepare trading and profit and loss account, you understand the financial performance of your business. That is, whether you earn a profit or you suffered a loss, right? And then when you prepare a balance sheet, sir, by preparing a balance sheet, you understand what is the financial position of your business, what is the position of your asset as well as your liability, right? And there, the accounting equation helps you. And accounting equation says, sir, your asset are always equal to your liability and capital, right? So the bridge is started with the analysis, identification, and you can reach up to the preparation of the financial statement. You cannot directly jump from without base, you cannot directly jump to the preparation of the financial statement. So this process of the accounting is very much important to follow step by step up to the financial statement preparation and financial reports preparing.